Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group.
Hello and welcome back to Kitco Mining with me, Paul Harris. We're here at Mines and Money in London, and this morning we're talking about gold production in South America, Latin America, sorry. And I'm joined by Doug Ramshaw, President of Minera Alamos. Good morning, Doug.
Good morning, Paul. Good to see you.
Likewise. A lot of people may not know the name Minera Alamos, so why don't we start giving us a brief description of who you are and what you do?
Sure. Minera's been operating in Mexico in one form or another for 14 years. The team has been building mines down there for 14 years. We kind of relaunched and rebranded with the Minera platform after the last company was sold to Argonaut. We're still doing what we always love to do, which is build gold mines. In an industry where not enough people want to build, it seems. Everyone wants to find stuff, but who's going to build it? That's I think, the real key focus of our team. Okay, thank you. Now, you have an approach to project development and mine building that's not very common these days. Tell us a little bit about that and why that works for you. Yeah, it's kind of classic Australian bootstrapping in that we don't need to define the whole global resource and scale a mine around it, especially in open pit heap leach, which can be very modularly expanded. So that allows us to take a 300,000 or 400,000 ounce resource and say, hey, yeah, we can build a mine here, but we can also see where the exploration upside is. But instead of funding that exploration, going back to the market every 6 months to pay for drilling, we'd rather do it out of the cash flow of a small scale operation that can then grow as you grow that resource space. So it is a bit of an Australian model, but the companies and management teams utilized it very well in the past, like when they built El Castillo and Durango back in the day. Okay, thank you. Now, you began production from Santana, your first mine, in 2021. You have Cerro de Oro, La Fortuna development projects in your pipeline. What are the plans there to execute on that pipeline? What are the main goals for next year? Yeah, so Santana kind of really, it's mostly been this year that we've been producing. So Q1, Q2, Q3, we've seen incremental growth in our gold production whilst keeping our costs very low, about $800 an ounce. That was a mine built for $10 million in the middle of a pandemic, and it's already paid back close to 70% of its capital. So it's had a very successful ramp up, and we'll continue to scale that up into its kind of first iteration of scale, which is 25,000 ounces. Knowing it can go beyond that, but more importantly, knowing that with that cash flow, which has strengthened our balance sheet this year, we now sit with 15 million cash, 22 million in working capital. That's going to help pave the way for us funding Cerro de Oro, another open pit heap leach. We came out with a very good PEA on in early October. We expect to have permits in for that in the new year, and hope to have those permits back by end of next year. Between now and then, Cerro de Oro, I'm going to arrange a debt package to actually fund it, with supported by the cash flow from Santana. We've got exploration plans, for that project as well, because we think we can make it bigger. But it should come on stream in mid-2024, all being well, and that's a 60,000 ounce a year gold operation, sub 800 AISC in its first 4 years of operation, and with a very modest 28 million US capex. So we're we're not invulnerable to inflationary pressures, but we're very insulated with these low capex builds we're talking about. A cost overrun on 28 million US is not suddenly going to mean we've got some giant funding shortfall. Okay, thank you. It's been a tough year for precious metals juniors, so it's great to have cash flow. It gives you some sort of insulation against that. How difficult has it been this year? I mean, it's been tough for investors that have, obviously been very loyal to the sector. Our shareholders have suffered some of those wounds as well, although I think we've held up reasonably well. But yeah, it's tough. I think it would be tougher right now if I was trying to build a really big mine, because there's that big question mark of what your capex cost overrun is going to be, and that's often seen quite a punishment on those stocks in the market where they've had to kind of bridge that funding shortfall because of inflation in the sector. I think we're all waiting for a turn in the US dollar strength that can be some positive tailwinds for the gold price. But for us, I mean, this is a very healthy gold price. $1,500 was a very healthy gold price. I think there are a lot of unhealthy operations out there, and we're trying to build a very healthy operation that can work in a $1,250 gold environment and also take advantage of an $1,800 gold environment.
Thank you, Doug. Now, as you referred to, a lot of juniors, or most juniors, have lost 70% or more of their market capitalization, their share price, over the past year or so. How does that complicate things for juniors?
Well, I mean, I think obviously, and especially if you're in a company that needs to raise money, that means the dilution is going to go up a lot. So the benefit of having cash flow to fund what you want to do as a company obviously gives us a distinct advantage in that regard. But also I think the advantage of there's opportunities that get created from that kind of weakness in the market. If you can be a comparably strong, we definitely want to be a growth company. Unlike previous takeouts that the management have had, we want to grow this company and then see where we can grow it to. I think a weak sector like this actually opens up and presents lots of opportunities. But we've certainly got enough on our plate already. So if we do a deal or we don't do a deal, I'm very happy with the organic growth our current portfolio would show.
Well, thank you. I'd like to sort of dig into that a little bit more. Beyond Cerro de Oro and La Fortuna, you've been talking about potentially acquiring or going after bigger assets. And I guess you're talking there about, there's opportunities potentially because of the low capitalization or market capitalization of a lot of companies. And now, as you sort of execute on that, will you have to sort of change and adjust your sort of bootstrapping strategy? Because, as you say, it's very different building a relatively modest open pit heap leach operation to something that's perhaps requires a much more substantial investment.
Yeah, I mean, absolutely. But I think you also had the luxury of, once Cerro de Oro comes on, at these kinds of gold prices, Cerro de Oro and Santana, between them, we should be hopefully kicking off, 30, 40 million US a year in free cash flow. That gives you a tremendous war chest for not only making acquisitions, but also putting in the science and the engineering and everything for bigger scale operations. So, I think that would be the natural part of the evolution of the company. It was important to get into a cash flow positive case first. And then as we scale up, and the opportunities are there, because if you think about how the mid-tiers and majors have been merging and consolidating, suddenly projects that are in the hands of explorers that maybe profile as 70, 80, 90,000 ounce a year producers. Well, that doesn't move the needle for those bigger companies. That's where a Minera, with one of the few teams that seemingly wants to build gold mines right now, can really take advantage and say, look, that asset is very meaningful growth for us. And yes, if it needs a lot more money spent into it, the early cash flow generation of our first few mines is really going to allow us to fund all that internally. Okay,
thank you. Now, crystal ball moment. What are some of the highlights or things you'll see coming next year? What are some of the things that will stand out or be the issues for the mining sector and the gold sector?
Oh, goodness. I think there's a lot of companies that need higher gold prices, for sure, on the production side. And those higher gold prices will hopefully help some of the explorers be able to fund a little better and hopefully start seeing a change in the trend from 2022. I mean, it's been a bleak 2 years, to be honest, Paul. I mean, the market kind of topped September 2020. It's been death by 1,000 cuts for 2 years straight. So I think management teams, shareholders alike, all deserve a little bit of respite from what's been a tumultuous couple of years, really, for the sector. But, I think that there is positive tailwinds for gold, in that crypto has kind of lost that early buzz of at the beginning of the year, and I think that was definitely a headwind for gold, and obviously the strength of the US dollar, we've kind of got to see that cap out. But I think we've got a healthy 2023 ahead. I certainly can't imagine it can be worse than 2022. So, we're going to continue to make smart decisions that make sense in the environment, and we'll be cautious in that environment as well. I think, you can get too aggressive too quickly, and that's not our style. So.
Okay. Well, maybe if you're a junior that needs to raise money, 2023 could be a very tough year as well.
Yeah, I mean, I would imagine it's going to be better than 2022. I mean, but yeah, I think that's always the danger of having a business model that is reliant on the capital markets, because you can never predict what's going to happen with them. And it's one of, I think, our strengths that, by building a business model that can generate its own cash, at least you remove that one variable from the equation.
Excellent. Well, thank you very much for joining us, Doug. Look forward to hearing more about Minera Alamos as 2023 progresses. Doug Ramshaw, President, Minera Alamos, thank you for joining us today.
Thanks, Paul.
And stay tuned to Kitco Mining for more from Mines and Money, London.
Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group,